Rivian. Rivian has taken the center stage since they reported their latest earnings report. Lots of comparisons between Rivian and Tesla. Will Rivian survive? Will it not survive? Is it a good investment? Is it a bad investment? Etc. etc. Now let me make one thing clear. Rivian is not like Tesla. Tesla has and gets a premium from the market because it is not just a car company. Now, you might believe that or you might not. That's a topic for a different discussion. But currently, Rivian, right now, and in my opinion, in the next coming years, is only going to be an EV car maker, whether it's R1, R1S pickup trucks, commercial vans, or the next one, R2, which the event will be next week. R2 is supposed to be a compact SUV, pricing between $40,000 to $60,000. But that's about it. It's an EV car company. It does not deserve a multiple because it is working on a humanoid robot or solving FSD or anything like that. Just so we're clear. Now, currently the stock is down close to 55% year to date. Has a market cap of $10.39 billion. One share will cost you $10.73. Today, actually, it's a pretty good day for Rivian. It's up 6.6%. Now, if you look at valuation, it's currently trading at 1.2 times EV to sales in the next 12 months. And if you look at what the analysts are expecting, it's pretty clear that fiscal year 2024 is not going to be a great year for the company. Sales is expected to grow around 11% year over year. But then in the coming 2 fiscal years, we see a huge acceleration, of course, with EPS still being negative. For fiscal year 2025, sales should grow 72.39%. Then in fiscal year 2026, another 54.2% year over year growth. So analysts are definitely expecting this company to come out of 2024 with better growth, better margin profile as well. Definitely what the company is expecting. Now, what I do find interesting is when we look at the average price target for the 25 analysts that are covering this company right now, the average price target sits at $19, which means it represents around 76% upside from the price we're at today. Now, if you look at the average price before the latest earnings report, it sits at $24.46. Now, you tell me, was this company worth close to $25 before? Probably not. And so right now we have a classical case of price drives sentiment. Stock goes down, analysts react with a lower price target. Stock goes up, analysts react with a higher price target, even though currently the average price target still sits quite meaningfully higher than the price we're at today. But also remember, probably a lot of the same analysts had a $150, $130 price target when Rivian went public. So there is that. Now, I just want to make one thing extremely clear here. I like Rivian, I like what they're doing, I like their vehicles, but that does not mean that it automatically makes it a good investment. As I said from the first video, when this was $100 and something billion company, good looking vehicles, great culture, cool, everything great. But it just didn't make any sense. Currently, in my opinion, the number one bull thesis for Rivian right now is that it won't go bankrupt. Either they figure out how to improve their gross margin profile moving forward, or someone will acquire them for a nice premium. That's currently my view of the bull thesis. I might be completely wrong, but that's my current view. Of course, do share your thoughts down in the comments below. By the way, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, where does Rivian go from here? How do they improve? Well, first of all, we got cost cuts. They recently said, and they announced, the reduction of the number of salaried employees by approximately 10%. Then, if we look at guidance, what's going to happen this year? They are guiding to 57,000 total vehicle produced for the year. Compared to 2023, they anticipate consumer and commercial vehicles delivery to grow by low single digits. And then they expect to shut down both the consumer and commercial lines in their normal plant for several weeks during the second quarter to introduce cost savings in vehicle technologies to the R1 platform. We believe these changes will meaningfully reduce our material cost and position Rivian to exit 2024 with a much improved margin profile. Of course, We've seen this with Tesla. So when I see the comments, oh, but they're shutting down the factory, not a good sign. No, Tesla has done it as well. It's a good sign. It's a sign that they're working on the production line. It's a sign that they're working to make those vehicles become cheaper to produce. And so the margin profile is supposed to become better. Of course, now we're getting a year, same with Tesla, we're getting a year where we're not basically getting much growth. But of course, with regards to Tesla, it's still profitable, Rivian, not at all. They then say with regards to the first quarter of 2024, due to managing changes in the supply chain associated with the introduction of new materials, they expect to factory gate approximately 13,500 units for the quarter. They anticipate the first quarter total deliveries to be approximately 10 to 15% below the fourth quarter of 2023 deliveries. Then they end by saying here, we remain confident that our cash equivalents, and short-term investment can fund our operations through 2025. So here you're already getting not a red flag, but an orange flag. If the company is not improving itself from top to bottom, well, they will be running out of cash by the end of 2025. They then go on by saying we aim to maintain a strong balance sheet position by continuing to drive cost efficiencies and improve our vehicle unit economics while opportunistically evaluating a variety of capital markets available to Rivian ranging across the capital structure. Over the long term, they continue to see a clear path to their approximately 25% gross margin target, high teens adjusted EBITDA main target, and approximately 10% free cash flow margin target. So this is another thing I would like to add. I do still think that if Rivian will go and tap into the capital markets, I think they'll be successful in raising more funds. Of course, that will cost investors because you get diluted. So again, the main bullish thesis for me here is number one, yes, Rivian will survive. Two, if they continue to struggle, they'll probably get acquired for a small premium. Three, if they need to raise cash, they will probably be successful in doing so, but they will dilute shareholders. Four, it's still just an EV car company. Now, for those that still haven't seen the latest earnings report, I quickly go over the main points, right? Production deliveries, we have seen that already. Revenue increased year over year. That's great. The main issue here is that we had a solid downtrend of gross profit, basically gross profit becoming a bit better, right? Gross profit became better one quarter after the other, and then last quarter, that number jumped up again. This quarter, that number jumped up again. As you can see here, gross margin went from negative 151% to negative 81% to negative 37% to negative 36%, and then back up to negative 46%. So basically, this is how much they're losing per unit delivered. Gross profit per unit delivered sits at negative $43,372. So right now, and this is by selling more expensive cars. So when I hear people say, oh, but the R2 will change everything. The R2 will not change everything unless they figure out how to produce those cars for much cheaper, right? Because right now, selling more expensive vehicles in probably the most popular market in the United States, they're already losing $43,000. Of course, cost cuts, reductions, operational efficiencies, etc., will probably push that number down. But to start making profits, there's still a long way. So to automatically think that the R2 will be a game changer is, to me, wishful thinking, because the R2 is going to cost less for the consumer, which means that for Rivian, they'll have to do quite a lot of cost cuts to produce that vehicle in a profitable way. Now, I do want to end on a more positive note, and that's the fact that they expect to be positive gross profit by Q4 of this year. Of course, if that happens, great. Probably we're going to see some signs maybe in a quarter before or so. But if that happens in Q4, then yes, they're going to go into 2025 as a much better company. Remains to be seen what exactly happens throughout the year. Remember, interest rates are still quite high. Markets such as the car industry during a high interest rate environment usually don't go well, as we've seen with the other companies out there, especially Tesla. And so to conclude, if we look at the graph, of course, last week, huge red candle because of that earnings report, especially the guidance. RSI is still pretty low at around 35. it looks like we're starting the week here quite strong. As we've seen, we're up 7.45% right now. Maybe the market has found a lot of buyers at around $10. As always, yes, round numbers for some reason always find some magic, always find some support or some resistance. So definitely keep an eye out on that. Right now, if you look at the moving averages, the 20-day moving average sits at 14.73, the 51 at 16.5, and the 200-day one at 19.46. Of course, next week, the R2 launch, whether or not it's a meaningful catalyst for the business itself right now, remains to be seen. Of course, you might see a lot of reservation numbers coming in. I believe you have to put down $100 or so, fully refundable, as we've seen with Tesla as well. But if the headlines say, oh, they've got 100,000 reservations already in the first 24 or 48 hours, expect the stock to react accordingly. So to conclude, Rivian, to me, is nothing like Tesla. Currently, maybe that might change in the long-term future, but currently this is a company that produces electric vehicles, commercial vans, EV pickup trucks, and then in 2026, the R2, a more compact SUV, all electric vehicles. But that's it. It does not deserve a super high multiple like a company that is focused on making humanoid robots or solving for FSD, for example. Then, the bull thesis currently is that Rivian will survive, it will not go bankrupt, and if the company will struggle, it will be acquired by another company, another car maker, or maybe Amazon, since Amazon owns part of that business. Remains to be seen. Great cars, cool concept. Currently, financially, they need to do much better. Remains to be seen how fast they can improve their margin profile in this year. So, do with that information what you want. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.